as my bank said, vigilante for
unprecedented financial crisis in Korea in 1997. He studied at Yale University and also Georgetown University, and he worked for many years for World Bank. During 1998 and 2002, he advised Korea Financial Supervisory Commission on chaebol restructuring, also negotiated corporate restructuring conditions for a $2 billion World Bank loan, negotiated and supervised a separate technical assistance loan, also participated in IMF program monitoring and Article 4 consultation missions, and participated in joint IMF-World Bank assessment of the South Korea's financial sector. Since 2014, he has been teaching economic development at KDI School of Public Policy and Management, and also Kyung Hee University. He also published a number of books, just to name a few. China Governance, Investment Climate, and Harmonious Society. That's published in 2006 by World Bank. And also Emerging Market and Crisis Application for Out-of-Court Workouts, Lessons from East Asia, 1998-2001. And also Corporate Restructuring and Reform, Lessons from Korea. Anyway, just to name a few. So without further ado, let's welcome Professor Mako with a big round of applause.
Well, happy Halloween. I could not imagine a better thing to be talking about on Halloween than this IMF crisis from 20 years ago. And when I was here at the time 20 years ago, I thought, well, this is a very big and scary crisis. But it's interesting with the passage of time, it doesn't seem quite all that scary. Korea emerged from it really very, very remarkably, sort of glided over it. And in fact, I wonder if it got through it too easily and missed a chance for more fundamental reforms. So actually, sort of the punchline question at the end of this presentation is, was this a crisis wasted? Could more have been gotten out of the crisis experience? Before that, I'll talk about, as you would expect, sort of a crisis chronology, crisis effects, crisis responses. I'll talk a little bit about immediate causes for the crisis, and then some deeper underlying causes. Which brings me to this lovely image here of Bank of Korea. Of course, Bank of Korea was a major player both before, during, and after the crisis. But I also like the symbolism of this image where you've got a fancy, modern Bank of Korea skyscraper in the background, and in the foreground you have this sort of hulking old Japanese building from when it was from the colonial times. And this actually sort of permeates the deeper causes portion of my presentation, where there's certain Japanese influences and elements throughout. Now, I love RASKB presentations where the speaker puts up a few photos and engages in an erudite stream of consciousness. This is not that. This is a financial crisis, so we're going to have lots of wordy slides and complicated PowerPoint tables. Starting here, well, here's a chronology of some key events during the 30 months, January 97 up through mid 1999. All through 1997, you had a regular drip of chaebol defaults, 13 in total, involving 28 trillion won in debt. Lots of scrambling to try to reassure both foreign banks and Korean banks. Didn't work. The IMF got invited in late November, signed a letter of intent with the Kim Jong-sam government late December. Interestingly, right after that, DJ was elected president, not inaugurated until February 25th. So you have this sort of funny interregnum where there's a real crisis happening, things are having to get done. So under the YS government, very importantly, KFB and Seoul Bank got nationalized. There was a very interesting agreement in principle to bail in foreign bank creditors. DJ gets inaugurated, takes ownership, started the chaebol workout program, which is actually what I worked on a lot. And then mid-July, you have this massive daily default, 80 trillion won, which was 2.5 times the size of all the defaults in 1997. You had signs that things were not all well. This is a slightly tricky table showing the spread between 10-year U.S. government bonds and 10-year bonds for safe borrowers in Korea. These were all state-owned companies at the time, right? KDB was 100% state-owned, KEPCO 75%, POSCO I think 43%. Pretty safe stuff. But in a 4-month period, you see the spread over U.S. Treasury bills quadruple, right? So clearly the market is not feeling so good about stuff. You see a bigger danger was the drying up of offshore credit lines, which were cut by 80% over a 7 or 8 month period, right? So that these short-term credit lines were not getting rolled over. So the money was having to get converted into foreign currency and then sent back to wherever it came from. You have some long gone banks here that you might recognize. Another sign of danger was Koreans actually exiting the won. Here you've got data on foreign currency deposits held by Korean residents. And this number more than tripling from $1.5 billion to $5.3 billion in less than a year. I mean, everybody remembers the scene of Korean housewives bringing in the family gold that could be melted down and added to BOK's reserves. But less attention was paid to this, that somebody in Korea was getting out of, some residents in Korea were getting out of the won. The big danger, of course, was the depletion in usable foreign exchange reserves, right? So from N94 through 95, N96, it had been a slight growth or substantial growth in foreign exchange reserves, and then an 86% drop during 1997. Now, a lot of times this is to give a sense of, to calibrate it or give an important sense of comparison. Foreign exchange reserves are often expressed in terms of import months, right? And this had been pretty steady in Korea at 2 or more than 2 months, and then suddenly by December 18th, 1997, Korea's foreign exchange reserves amounted to 8 days of imports, right? So the cupboard was fairly bare at that point. And then sort of the final collapse was this very sharp drop in the value of the won. And this reflected demands you see here. For instance, money having to get changed for repayment, foreign banks, 7.4 billion going out, citizens converting into foreign exchange deposits. And then there was this prospect going forward in 1998 that another $36 billion of short-term debt to foreign banks was going to come due, right? So you've got lots of demand for foreign exchange and not so much demand for the won. So of course the won value tanks quite precipitously after the middle of 1997. Now, so those are some of the crisis effects. Now, in terms of what caused this thing, the immediate, proximate surface causes, I think there are three things here that are enough to explain this. One was that Korea had a very, very weak financial sector. Second was incredibly reckless behavior by the chaebol. And the third thing was there was a problem with regional contagion. There were some very sharp devaluations of the Thai baht on July 2nd, and of the Taiwan new dollar in mid-October. So there was a real dramatic shift in market sentiment from enthusiasm, risk on, to total risk aversion, risk off. Like no risk was safe, hence the rise in KDB and KEPCO spreads. Looking at the financial sector problem, you see here a really sharp growth in foreign-denominated debt. So here you see of the 164 billion total in 1996, 117 billion of that was, or 71%, was with Korean banks. It's also interesting to see how much this borrowing from foreign banks had been increasing quite sharply. I think it's about 30% year on year. And then I don't show it on here, but of the 164 billion in offshore debt at the end of 1996, 93 billion of that was short-term, right? It was coming due within a year. And this seemed to be due to a couple funny situations for reasons that are too complicated to go into here. The regulations have really encouraged short-term borrowing offshore by Korean banks, and then the Korean banks would lend it to the chaebol. And the regulations discouraged, hard to believe this, long-term loans, bonds, and foreign direct investment. So there was really only one way to get money. Now, the Korean won had been pretty stable for a long period of time, at about 800 to the dollar. So people didn't pay attention to hedging, right? So there was this massive short foreign exposure, unhedged, basically borrowing short, lending long, and hoping for the best. So another aspect of Korea's commercial banks was that they were pretty non-commercial, as it turned out. They had a very troubled history. The five majors were originally Japanese. They were nationalized after liberation. There were some pretty dubious privatizations by the ROK Government, selling these banks on real sweetheart terms to industrialists who had contributed to the Liberal Party. So the banks were renationalized by Kyung Hee, which then proceeded to force citizens to save and directed credits from these state-owned banks into the Blue House's favorite projects. And then eventually the banks were re-privatized in the 1980s. Unfortunately, they continued to act more or less like state-owned banks. They had still large non-performing loans as the crisis year arrived, but they never really been particularly good banks. They didn't have much of a commercial orientation. They didn't have good credit appraisal skills. They didn't have good information systems. Sort of a lazy operation relying on, instead of forward-looking cash flow projections, just relying on collateral and intra-chaebol credit guarantees. And there was always sort of another problem was, of course, you always had KDB and Kexim lurking around. So there was always the threat that if these commercial banks didn't make the loan, somebody else would do it. So they felt compelled to try to not lose the business. So in addition to sort of generally weak banks, the banking regulations were weak. That's too much of a topic to go into here now. But suffice it to say, by the end of 1997, the Korean financial sector was sort of hurting. Of 27 commercial banks, 2 were insolvent, Seoul Bank and KFB. Another 14% were below the Bank of International Settlement, 8% capital adequacy ratio. Another 11, they seemed okay, but frankly, the accounting wasn't particularly good, so that wasn't necessarily credible. Then there was this whole other bunch of entities known as NBFIs, non-bank financial institutions, which do not take deposits, right? But they would be active in the bond markets, raise financing there. They were frequently owned by chaebols, which created some problems.
Okay.
Yeah?
I'm sorry, could you please just briefly describe what chaebols are?
I'll come to that, actually.
Oh.
Yeah. Okay. Great question. I love talking about chaebols. That's the next one, too. Okay, so you can just see the statistics here of the various varieties of non-bank financial institutions. They were all, or at least half of them, were tending to be stressed. Now, coming to chaebols. This is great. Perfect timing. This is the Chinese character for chaebol, which you can interpret it different ways, but my favorite connotation of it is invasive wealth clique. I like that one. I got that from an investment banker here in 1998, so it must be right. In terms of invasiveness, this slide tries to illustrate this for the top 22 chaebol, showing increases in the number of chaebol affiliates. And I say affiliates because they weren't necessarily strictly subsidiaries, sort of a free-floating universe with lots of cross ownership back and forth. But you see massive increases in the number of affiliates in the 1970s, 1980s, and 1990s. About 60% of them were in related fields, right, which sounds okay. But 42% were totally new areas, horizontal diversification. We were amazed when we started working in Korea. You know, we kept joking about each chaebol did everything from chips to chips. And we used to speculate, what are the chaebol chairmen doing when they go to the men's room at the Federation of Korean Industries? I mean, are they comparing each other's affiliates? I don't know. It was just really quite bewildering. The problem, of course, with this is that you're also going from probably competence to incompetence, right? So you had chaebol that were originally good at something, and then they all seemed to get into something they were no longer good at, right? So you had Samsung starting out in food and electronics, and unfortunately getting into automobiles. You had Hyundai, which was good at construction and automobiles, unfortunately getting into electronics. You had Daewoo, which had a nice trading company, I guess, and then just did a lot of really very bad acquisitions, right? So from competence to incompetence. Another hallmark of chaebols was they were very good at using other people's money, OPM. I wouldn't worry about these details here, but this is sort of interesting. So of the top 30 chaebol, on average, they had 27 affiliates, and of the equity, only 4% was owned by family members. On average, 39% was owned by other affiliates, right? So typically, what you had was some successful cash cow business, which generated earnings and debt service capacity. So they would then borrow off of that and create new, diversified, horizontally affiliates owned by public shareholders. Now you would think, theoretically, the public shareholders should be able to control things, but that unfortunately was not the case. Now, I have really great org charts from 1997, and I couldn't find them. But I did find this ownership diagram for Samsung Group as of the first quarter of 2014, right? And it's just not changed that much. I mean, certain aspects have changed. So you had lots of cross shareholdings, as you see here, and you had cross debt guarantees, right? So where the good cash cow flagship company would guarantee the debt of the new fancy, shiny startup. And there was usually something that was referred to as the family control tower, operating outside of normal corporate governance principles, which would control everything. So I remember, for instance, at the time in Samsung, there was this little private family company, Everland, which controlled the whole Samsung group. But on this question of cross guarantees, I remember that when Kia Motors went bankrupt, the story on that was that Kia Motors, which was a perfectly fine company, had guaranteed the debt of Kia Specialty Steel. Now, when steel went down in mid-July, the debt guarantees were called, and Kia Motors went with it. Now, this is obviously a bad deal for the shareholders of Kia Motors, right? But it was not, as they say, a good corporate governance environment. There was also a certain amount of fraud, notably at Daewoo, which had gone on a tear, acquiring bad businesses over the years. And as they got into the crisis in 1997, they started doing massive upward revaluations of assets and then selling assets back and forth between affiliates and raising those prices there. I mean, we don't need to go into all of this, but as of August 1997, Daewoo was saying that group equity was worth 14 trillion won. When the accountants came in and did the due diligence, they actually found a 29 trillion won hole. So 43 trillion won difference, of which 23 trillion, or 53%, was due to fraudulent accounting. Over here, of course, we have, that's a little bit fuzzy, but we have the founder of Daewoo, Kim Woo-jung, who I was privileged to have lunch with in February 1998. So it was he, his associate, and my boss. And my boss, as ever, he was always trying to be helpful. And he knew, it was just obvious that Daewoo was heading into trouble. So my boss said to Kim Woo-jung, well, why don't you get some investment bankers? You know, so we had this Homer Simpson moment. He said, why don't you get some investment bankers in here? Why don't you get Goldman Sachs? And Mr. Kim looks at us and goes, investment bankers? What do they know about Korea? You know, so, you know, I guess I'd have to agree with him. More on OPM, other people's money. Very reckless use of debt. Lots and lots of ongoing investment, outpacing sales growth. You've got more and more leverage, liabilities to equity, almost 4 times as much liabilities as equity versus this ratio in the United States. By 1990, these companies weren't even able to cover their interest payments. And by 1996, cash flow was only 40% of interest expense, and a continuing decline in return on equity until it got to be negative. And you can see over here with some of the famous chaebol that the liabilities to equity ratio was generally above 3.6, right? So you have to ask yourself, what were these guys thinking, right? How could this possibly end well? Well, what they were thinking was that the government was going to bail them out someday, as it had, in fact, during the Park Chung-hee regime. So we need, this is sort of the surprise here, the Japanese element. So we need to go back and look at that. Now, this photo is purportedly a photo of Park Chung-hee when he was in the Japanese army under the guise of Takagi Masao. So I got this off of the internet, so, I mean, it must be true, right? Anyway, Park Chung-hee graduated from the Japanese Military Academy in 1944. He had these development models in his head that were current at the time. One of which was this notion, rich nation, strong army, right? So he saw the ability to have a major chemicals industry, major metals industry, steel, heavy engineering as a prerequisite for a strong economy. So soon after taking power, he sort of quietly launched the HCI initiative, heavy and chemical industrialization, which was sort of burbled along sort of quietly without too much formality for many years, and it was formally announced in January 1973. Keep that date in mind. And through various means, national champion, up-and-coming chaebol were found who got preferred access to bank credits, bank guarantees, tax breaks, licenses, etc. Now, at the time, Korean businessmen, at least in the early 1960s, were said to have been somewhat cautious. You know, not a huge risk appetite. But the Park government kept saying, don't worry, just invest, go do it. If you get into trouble, we'll bail you out. Well, not surprisingly, in mid-1969, almost 100 of these companies were facing some sort of a liquidity crisis. Now, the government didn't really want to put these things in the bankruptcy court, so they nationalized 30 of the non-viable, and for 56 of the viable problematic companies, it was the Blue House that administered sort of the workout, right? They distributed losses among the banks, the chaebol, workers, and owners. Now, this was not exactly best practice, right, in terms of how to do this. But the good news was that at least somebody was taking a loss, right? Some equity holders were losing out. Some banks were losing out a little bit. Now, right after this time, something dramatically changed. And suddenly, Korean chaebol started to engage in much, much riskier behavior. What was it that happened? Richard Nixon came along, right? Doesn't he look good? I mean, don't you feel sort of nostalgic looking at him? Well, what happened in July 1969 was that Richard Nixon announced the Guam Doctrine, right? Which could basically be interpreted that if North Korea invaded, well, the South Korea might find it on its own, right? It was going to have to take care of itself. Nixon also went ahead with a 33% cut in U.S. forces in Korea, and it was announced that U.S. economic aid would be ending at the end of 1969. So what you saw, and these things clearly rattled President Park. So what you saw after that was a real acceleration of the government's HCI program, right? It really did go into hyperdrive. Through the 60s, you know, there were a few projects every year. They were getting coordinated by the Blue House. After the Guam Doctrine, it was basically the government telling the chaebol, go out, invest in everything, we're going to support everything, don't worry about it, just do it. Well, again, this gets sort of problematic. You know, more and more moral hazard too much of that. But the real, and there's a recognizable part, but there was this very important emergency decree in August 1972. There had been massive unregulated borrowing on the curb market. And in August 1972, this decree basically suspended repayments to the curb market for 3 years, capped their interest rates, which had been as high as 20%. So basically what's happening here is you're usurping property rights of the private lenders, and you're giving the chaebol borrowers a free pass, right? So it's just massive moral hazard, right? So they're saying, well, we can go out and hawk it up again, and the government's going to bail us out. Okay, now back to 1997. IMF comes in. There's a letter of intent negotiated, a total of about $58 billion in standby funding. IMF putting in 21. I know the World Bank lent $7 billion, not sure about ADB. I suspect this bilateral money probably wasn't called. But in return for this funding, the idea would be that the government would meet certain conditions, which kept evolving, frankly, as the program went along. And my friends at IMF the guys I worked with, did an assessment on this, and I think it's right, that the real core conditions were stabilizing the yuan and financial and corporate sector restructuring. There was a lot of other sort of Christmas tree stuff that got stuck on. Probably would have been better if they hadn't bothered. So how did the markets respond to this? Like, was this the thing that was really, really going to save Korea? Well, as it turns out, the markets did not respond all that well at the start. Over here, you see credit ratings, Moody's, S&P, etc., which are just plunging dropping in November and then really plunging in December after the IMF program is announced and then starting to crawl back. The other thing you've got over here is the rate at which short-term debt owed to foreign banks was being rolled over, right? So this just dropped to about 20-25% rollover rate in December and just didn't really move through the month of December. So it took a couple weeks after the IMF letter of intent and it started coming back nicely. Oh, this slide is terrible. Anyway, okay. Yeah. So I don't want to dwell on this too much. This is the yuan-dollar rate over here. This is the overnight rate on money on a per annum basis. And you can see to defend the yuan and encourage people to stay in the yuan, they drove up the overnight interest rate pretty substantially from a rate of about 10% per annum to about 35% per annum. So you see some stabilization of the yuan, going from about 1,800 to about 1,300 in March. But it really did take a while for this to fix itself. And there's an aspect to this crisis recovery which is not, I think, really so much appreciated in Washington, where everybody just talks about the IMF. But a very important part of the program is what was referred to as bailing in the foreign banks. Because this goes back to this problem that Korean banks were going to owe $36 billion to foreign banks that had to be repaid during 1998. So the problem was that the bailout money would immediately flow out unless there was some sort of a bail-in of the foreign banks, right? So a lot of work got started pretty early on. The government Korean government was working on this from mid-December, and the record shows that actually people from Kim Dae-jung's staff were working with the Young-sam government on it straight away. Started doing some cooperation with the U.S. Treasury and IMF, roadshows, getting the foreign banks on board, standstill agreement by January 15th, which is a sort of a first step to getting this under control, and then a final restructuring agreement by the end of March, involving 134 banks in 32 countries, to whom 33 Korean banks and overseas bank branches owed money. So it was a sort of a remarkable amount of stuff that was done. Of the $36 billion that was owed for coming due in 1998, 22 billion of it was restructured, and of that, 83% of that was restructured to 2- and 3-year terms, right? So that was a really important aspect of this. Another terrible slide. It was a very quick turnaround, right? A short, sharp shock. You had a big drop in GDP in 1998, but pretty ebullient growth in 1999, such that real GDP in 1999 was higher than it was in 1997. You had a 1-year real bump up in inflation due to the devaluation, I think. You did have a pretty sustained permanent structural increase in unemployment. It's interesting, Korean government's always run itself in a very fiscally conservative manner. I think that's all we need to talk about here. I did want to just hit on one aspect of this sort of peak interest rates question, which people really remember as having been a very dramatic interest rate shock. So the IMF guys compared the Korean experience with those in these other 4 crisis countries, Thailand, Mexico, Brazil, Sweden. And they looked at the average, what's referred to as the threshold rate, interest rate during the 2 years before the crisis, right? And then they looked at the peak interest rate once the crisis got going. Looking, and sort of that on this side is the incremental interest rate. And then the period of time, the number of months that the peak interest rate was above the real threshold rate, right? I just took these two numbers and multiplied this by this to come up with my own do-it-yourself pain index, right? You know, it was painful in Korea, but it looks to me like it was 2 to 4 times more painful in Thailand, Mexico, Brazil, and Sweden. So I just thought that was an interesting point of comparison. In terms of recovery, banks were rolling over 100%, foreign banks were rolling over 100% of short-term debt by March 1997. Foreign exchange reserves came back just great. They quintupled between between July 1997 and March 2001, due to, you weren't having to repay so much foreign debt, a great trade surplus because of a weak won, and foreign direct investment coming in. The chaebols did do some deleveraging. So down here you've got the interest coverage ratio, right? Cash flow divided by interest expense, and here liabilities to equity. So here, Korea 1997, you had liability to equity ratio 4 to 1, and interest coverage ratio just 1. So they did manage to improve that by 1999. The leverage to equity ratio was down just over 2 to 1, and the interest coverage ratio had improved a little bit to about 1.3. The U.S. is over here, much more conservatively financed. to financial sector restructuring. The government put 118 trillion won of public funding into financial sector restructuring. About 30% was used to buy NPLs at Camco, another 70% for recapitalizations of these various banks. I think it would be nice for somebody someday to do sort of a history of the restructuring and reconsolidations of the Korean financial sector. I mean, you see names here that just passed on into remote history. The thing I wanted to comment, though, is on this, this limited role of foreign direct investment. You did see Standard Chartered buying Korea First Bank, which was relatively small. And then there was this Korea Exchange Bank, which got kicked around a bit. Commerzbank, I think, had been running it on a management contract basis. Lone Star came in at 53%. That did not end happily for Lone Star. HSB sniffed around, tried to put in a bid, but was discouraged. Finally, it was sold to Hana Bank in July 2015. So it is remarkable, after this turmoil and bad history and problems in the Korean sector, that you really didn't get more foreign direct investment. Okay, lastly, on the crisis effects and recovery, you know, it's worth mentioning that the government did work to increase and extend the benefits from unemployment insurance. It tried to provide additional safety nets for really dire situations, and almost tripled the percentage of GDP being paid through social safety net payments, and lots of public works in infrastructure. So you had infrastructure spending increasing, increasing an additional 150%, taking up 0.5% of GDP. So lots of efforts actually on the government to try to make things a little bit better. In terms of overall effects, I sort of like this way of looking at income distribution. These are ratios of the income going to the top 20% of the public versus the bottom 20% of earners in society. So in Korea, in 1997, the top 27% was earning, top 20% was earning 4.5 times as much as the bottom 20%. By 1999, there had been some increase in inequality, right? So the top 20% was earning 5.4 times more than the bottom 20%. So more unequal than Sweden, about like Canada, better than the United States. I don't know. I found these interesting. I sort of wonder about whether Korea has become more unequal over time. I tried to find current data on this, but I couldn't. Okay, wrapping up. I think an interesting question here, looking back over 20 years. We've seen here that Korea did a pretty good job on crisis stabilization and restructuring of the financial sector, some restructuring of the chaebol. But I do wonder what it all means. I mean, was this in some way a waste of a perfectly good crisis? I mean, could Korea have gotten more out of this, right? So up here you have the Hansa for crisis, which can have the connotation of danger plus opportunity, right? Was there an opportunity missed here? So these statistics here or this table here is comparing for financial sector measures Korea with 3 possible peer countries in the region. And these country standings, which are based on 138 countries, comes from the World Economic Forum's 22 2016 Global Competitiveness Report. So in terms of financial sector responsiveness, worse than China. In terms of financial services affordability, about like China. Soundness of banks, worse than China. Yeah, these are local experts that are responding to this survey. Local availability of capital market financing, about like China. Venture capital availability. I mean, way in the basement there. You know, which raises a question again in my mind: should there have been more of an opening up of the financial sector during the crisis? Another question here is: are the chaebols still too dominant? Right? If you look at the top 5 chaebol and revenue to GDP. In 1997, they certainly were dominant. I mean, the chaebol chaebol revenue was equivalent to 2/3 of GDP. That has decreased somewhat, but it is still quite substantial. Looking again at these World Economic Forum rankings for 2016, we see sort of an interesting schizophrenia here, that the local survey respondents think local competition is incredibly intense, right? So it ranks 6th worldwide for intensity of local competition. But on the other hand, freedom from dominance by big business groups, it ranks much farther down the scale for that. In terms of quality of competition policy, it's not bad. I haven't really looked at it much since I worked here on the question, but I have noticed that Korea Fair Trade Commission is certainly active, right? They do a lot of things to try to modulate chaebol behavior. But in terms of things like freedom of inbound foreign investment, sort of this important corporate governance issue of protection of minority shareholders, it's worse than China. And also in terms of labor-business relations, it's worse than China. So I just think it's an interesting place to close and perhaps discuss more if you're of a mind to, whether in fact the crisis was too easy for Korea, whether it got through it too fast, it was too efficient at marshaling its massive fiscal headroom and fixing the surface problems without dealing with some of the underlying issues. Now, if any of you are of a mind to do further reading, I like all of these things. I'll just cite 2 of them. These were the guys I worked with at the IMF. It was funny, we had this, I had 2 experiences with the IMF. There were two phases to my experience of working with the IMF. It was the nice, it was like the evil IMF and the nice IMF. The first bunch we worked with were just impossible to work with, and then these guys were great. This book, edited by Kim and Vogel on the Park Chung-hee era, I found very interesting. I, of course, was a wee lad when Park Chung-hee was president, so I don't personally remember any of this stuff. But I found a number of the chapters in here quite interesting, and they were all pretty strongly making this connection between the HCI initiative, the Guam Doctrine, and the acceleration of moral hazards. So that's all I got. Right. So I look forward to your questions. Thank you.
Any questions?
Thank you very much for the excellent presentation. I learned a lot from. I also was here during and after the height of the crisis here. And correct me if I remember incorrectly, but Korea was one of several countries to receive an assistance package from the IMF. But Malaysia, which also went through a crisis, decided very much, we're going to go our own way, do our own thing, and Mahathir, who was in charge then, was very much, you know, I'm going to forge my own path. Could you say something to compare Korea's response to its crisis with, if you know, I don't know, if you know, with Malaysia's response to its own crisis?
Yeah.
Thank you very much.
Yeah, that's a good question. And Malaysia's an interesting counterfactual, right? I mean, Korea really went with the Washington consensus. This is how you fix a crisis. It was a pretty standard IMF package of, it had gotten better over time, but a lot of emphasis on raising the short-term rates in order to defend the currency. Actually, the IMF had gotten a little bit better in saying you do also need to pay attention to social safety nets. They weren't trying to squeeze the government fiscally the way they had done in IMF programs 10 and 20 years earlier. But it was very much a typical modern IMF program. They tried to do something similar, I believe, in Malaysia. The World Bank was also trying to do stuff in Malaysia, and it was more Washington consensus type stuff that, you should do it this way. And Mahathir said, like hell, we're going to put currency capital controls on so that you can't take the capital out. And I think it seemed to work okay. It's not so much my area, but they got through it okay. I don't know that it did any long-term damage to maybe some. But certainly bankers have short memories, right? And they were back happy to put capital into Malaysia not too long after that. There were some similarities between Korea and Malaysia in the sense that both had relatively strong creditor rights, so it was easier to work out and encourage distressed corporations to work with their creditors in a sensible, business-like way to come up with deals. I personally regretted that Mahathir threw everybody out, because I think it would have been a nice chance to work on it and see how a different type of approach was working. It was a good question. Oh, doom is coming. It's Dunkirk.
Okay, well, thanks very much. I wish I had all these charts and graphs and statistics when I was writing a book about the 97-98 economic crisis, because I could have used probably all of it. But just coming to up to date, you mentioned that Everland was a small company that was the holding company for Samsung. I think Everland has been absorbed by jail, which is in turn is merged with Samsung CNT. So that's I think that's the holding company for Samsung, although you can't be totally sure. Samsung Life also has holding company, holding company, shall I say, attributes. So I wonder whether or not you see much change going on there, and whether you think, is Samsung in jeopardy? What's going on in Samsung? They just announced today that the third quarter profits for Samsung Electronics were unbelievably better than last year, third quarter, and probably better than this year's first and second quarters. Just unbelievable statistics. But how long can this go on? And is the government going to crack down on Samsung CNT? Is this enduring? What do you think should be done?
Yeah. It's amazing. They had a gangbusters quarter just now. The acting chairman is in jail. A lot of times I felt that our organization would work better if my boss was in jail. But you're absolutely right. I unfortunately put up a new slide and talked about history. In the old days, Everland was the control tower, and now I understand CNT is sort of the holding company for the thing. So I think they've tried to crisp that up a bit. It does feel to me, though, that that attempts to discipline the chaebol tend to be more like harassing them instead of systematic working of competition policy and competition principles on the one hand, and really improving corporate governance and protections and rights for minority shareholders on the other hand. I think whatever the circumstance, I can't remember the exact numbers, but with the C&T and Cheojedong merger, I think having the National Pension Service as a major shareholder just sets you up for nonsense, right? So, I mean, it really might be better if the government was not an active participant in the market for Korean corporate equity, and if the country had done more to develop its financial sector, its equity markets, and institutional investor base. So that's just me.
Thank you. Thank you very much for that really interesting account. I just wanted to go back to what you were saying about the wasted crisis. And you mentioned a number of underlying issues which you felt had perhaps not been addressed in the way in which Korea emerged from the crisis. That sort of implies that you see that there are kind of vulnerabilities that remain. And I just wondered whether, what kind of risks you think this remaining sort of unreformedness leaves Korea exposed to looking ahead to future years?
Yeah, I don't know that I would characterize this as frightening short-term risks. I see it more in the nature of missed opportunities. And again, I think the World Economic Forum rankings on the financial sector are interesting. It just suggests it's sort of a lame, not particularly interesting, not particularly innovative financial sector. I mean, it's there, it sort of intermediates, but it's not particularly interesting. I mean, you just wonder what more could be done there. I still do feel like this question of perception of dominance by the chaebol, I think, is an interesting question. How you solve it, other than saying again, I think maybe more thought on competition law, competition policy, the administration of the regulation and supervision of competition policy. There might be some scope there. And I've got to think, especially when I look that Korea is ranked 70th out of 138 countries in terms of protection of minority shareholders. I mean, I've got to believe that there's still massive opportunity for reform on the corporate governance side. Maybe more independent directors, more empowerment for independent directors, more opportunity for shareholder lawsuits, National Pension Service exiting maybe. I don't know. I mean, I don't do this on a day-to-day basis. It's sort of this was a trip down memory lane for me, and then I ran around and grabbed some stuff from 2016, so I'm sort of making this up.
More than this, a cameraman, I have a question for you. Excellent presentation, of course, but one aspect that you did have an opportunity to touch on, it was outside of the financial banking sectors. Of course, this was impacting on the everyday Korean, and there was some pride that they were doing better than some of the other countries, but there was also a bit of a stigma of the IMF coming in and pushing Koreans around for right or wrong. And I wanted to know, since you were kind of in the bowels of trying to restructure a lot of this, how much did the political element, where you had people actually begrudging the fact that the foreigners had come in with their capital and basically telling the Koreans what to do for right or wrong, And did that ever influence any of the decision-making that you witnessed during that period?
That's a good question. As I was going to Korea for the first time in February 1998, I mean, people were in Washington were saying, watch out. I mean, these guys, the Koreans are tough, and they're going to be resentful and not really receptive on this. So I was actually rather surprised. I mean, my main interlocutors were at the Financial Supervision Commission. We actually found them very reasonable, easy to work with. I think there was some sense in which the Koreans might have felt embarrassed about the whole thing and chastened and just a little, in sort of a period of quiet, just absorbing what was happening to them. That might have been one aspect of it. Now, of course, I worked on chaebol restructuring, and by that time, the DJ government was coming in, and his people had enunciated a set of principles and things that they wanted to do. And of course, it's a very hierarchical government, right? So something like that comes out from the new president's office, and people are going to respond to that. And that was a lot of what we were wanting to do. So, our experience working, at least with the FSC, was very, very positive. We were not, it's a little inside baseball, but we had this long set of discussion and debate with them on providing guidelines versus guidance for how the banks should do chaebol restructuring. And we kept using the word guidance, and this was like poison, which I didn't appreciate at the time because of the Kyung Hee directed lending program. So, but that was a minor hiccup. We were actually surprised how reasonable the Korean officials that I was working with were, and how receptive they were to our inputs. I worked also a lot in Thailand, and that was a much more fractious relationship. Frankly, we found the our IMF partners a lot more difficult to work with than the Korean officials were.
Thanks, Bill. Appreciate it very much. You talked about the IMF crisis 20 years on. There was actually another incident about 10 years ago, the great global financial crisis, which I think I haven't heard much discussion about today, but I think it had a very big impact. I think that largely Korea's self-reform and whatever was going along quite reasonably until 2008, and they looked at the United States in particular and Europe as well, and they said, oh, these guys that have been preaching to us all along are just as big as sinners as we are. And I think a lot of the credibility and faith in the guidance of the IMF disappeared in 2008 and subsequently. And I think perhaps, I would postulate that perhaps some of the reason that Korea's ongoing reform, if that's the right word, has been stalled, is because the Western financial model lost its credibility 10 years ago. Your comment on that, please.
Yeah, I was unfortunately working in the Middle East at that time, so I didn't really have a sense of how the Koreans were interpreting the Great American Hiccup. So I wasn't here for that. I think, of course, the U.S. periodically doing its own shooting itself in the financial foot every 10 years, and the American regulators missing it, and the IMF missing it, don't help with anybody's credibility. Certainly don't help with their credibility. I do wonder, though, when I look at, for instance, at these World Economic Forum rankings, the Koreans are a pretty competitive group of people. I wonder what, when they see these rankings, what they think about it, how they interpret it, say, why are we, in terms of financial sector responsiveness, why are we at 59th when Japan is 12th and Singapore is 3rd? I just find it a mystery that they continue to accept this frankly, second tier type of financial sector.
So, no more questions?
Okay, one quick follow-up on that. I mean, the Americans, the IMF imposed on Korea 20% interest rate. The solution they applied to themselves is 1% interest rate.
Yeah.
Same, different solution, the same problem, much less painful. I don't blame the Koreans for being so.
Yeah, point well taken. Different types of crises.
Okay, let's give a big hand.